The best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian. I will take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares moved lower today, reversing that positive momentum we saw in the previous session. So the Straits Times Index was down 0.49% at 4,252 points at about 12:46 p.m. Singapore time, and that is with a value turnover of some 852 million Sing dollars seen in the broader market. Now let's take you through how the Singapore stock market ended the day. The STI ended down 0.28%. We're looking at 4,261 points. In terms of value turnover, that's 1.8 billion Sing dollars. Gainers outnumbered losers, 335 versus 245. Top advances for today, we've got City Developments Limited, JMHUSD and ASUS. And top decliners, let's see, we've got iFast, UOB and DBS. In terms of counters to watch, we have Keppel DC Reit because its manager said today that the REIT posted a 12.8% year-on-year increase in distribution per unit for the first half of the financial year ended June. Now, elsewhere from how US President Donald Trump locked horns with Fed Chair Jerome Powell during a rare presidential visit to the US Central Bank overnight, to how Sony bought a strategic 2.5% stake in Japanese game franchise giant Bandai Namco in a bid to grow its anime business. We've got more international and corporate headlines in focus. Also on deck, a quick look at Max 7 earnings out thus far. And joining me on the line this time around is Benjamin Goh, Head of Research and Investor Education at SIAS. Ben, welcome to the show.
Hey, hi, Didian. How are you?
Good. And Ben, let's start with global news this time around. I mean, US President Donald Trump, he locked horns with Fed Chair Jerome Powell during this rare presidential visit to the US Central Bank. There appears to be some disagreement on the cost of renovation of the Fed headquarters, but the aim, as always, seems to be to pressure Powell into lowering rates. Now, keep us up to date on the latest. Is this just for the theatrics, or would the Fed really budge?
Well, yeah, you're right. So there was a bit of a live on-air drama. Jerome Powell's rebuttal to President Trump was that the president had actually added the renovation costs of a different building that was already completed renovation 5 years ago. And this is kind of in line with what the Trump administration has been doing since it took office, right? So remember, you have got the Department of Government Efficiency, DOGE, that initially came up with billions of dollars in savings, and then over time people were pointing out the mistakes and errors, and then they had to kind of like downplay it quite a fair bit. I think this could be something similar. So on the face of it, it does appear that Trump could be playing up the renovation costs as a way to kind of pressure the Fed. Now, to be clear, under U.S. law, the U.S. president can only remove a Fed governor, which includes the Fed chairperson, only for cause, and this generally means that we have got major or gross misconduct. So things like renovation cost overruns generally are not, do not fall into that category. There's a fairly high bar for that. So I'll just put it down as the typical theatrics from the Trump administration. And of course, the end game here is to, tekan the Fed enough so that they will either A, lower interest rates, or B, Jerome Powell will basically quit on his own, and, Trump can nominate a more, inverted commas, collaborative, close inverted commas person to be the chair. And of course, we've seen all this before. I mean, if you're my generation or older, you remember President Nixon. He did the same thing to the Fed chair back in the day. And again, same problems. He needed to juice economic growth while paying for the Vietnam War, so on and so forth. So he wanted the Fed to lower interest rates. And of course, there was a huge problem there because inflation was running high. So we've seen this story before. So that looks like the playbook for the Trump administration for right now.
I see. Now, closer to home, Ben, Asian stocks fell today. Their latest rally ran out of legs. Sentiment weighed by a strong U.S. jobs report, or the initial claims for unemployment benefits, 217,000 initial claims for unemployment benefits in the week to 19th of July. That's the lowest since mid-April, suggested that the U.S. labor market remains tight. Of course, then that would have implications on interest rates. So how would you read into the latest numbers and Asian investors' reactions today?
Well, I think it's a classic case of good news, bad news.
Yeah.
So the good news is that the U.S. economy is not flying off the cliff. It's surprisingly doing just fine, even with all the crazy that is going on. Bad news, obviously, is that the Fed is obviously in no hurry to cut interest rates because, well, things are not flying off the cliff. Now, if you look at the options pricing data from the Chicago Board of Exchange, the implied probability of the U.S. Fed keeping interest rates unchanged in next week's meeting is 97.4%. So the market is, kind of like, the Fed is not going to cut simply because things are not going off the rails. So this is not the end of the world. So obviously the good point is that the economy is doing fairly well. And the second quarter earnings season has just started. Again, analyst expectations are rather low, so not too difficult for companies to meet and also exceed expectations. Companies that have already reported numbers are more or less in line. No dramatic red flags as yet. Again, if you look at today's Asian markets, as you spoke about just now, markets seem to be taking a breather in line with U.S. performance last night, as well as European markets that have opened a little bit low, but performance ranges from about flat to down at most 1%. So not too crazy. I think the market is just taking a breather right now.
I see. And if we could go back to the Singapore stock market as usual, Ben, very quickly, how did the STI fare today? Any surprises when it comes down to the companies to watch, including Keppel DC Reit, after posting their 12.8% year-on-year increase in DPU?
Well, the three local banks closed lower today. OCBC, UOB down about 0.5%, DBS off about 0.3%, about there. Kind of makes sense since if we're going to have stable interest rates, that means when it comes to the bank's net interest income is going to be steady as she goes. If you look at the sector performance on SGX, transportation and utilities were up at least 1%. Out of the 18 sectors tracked separately by SGX, actually 14 of them were up in the green. It's just that because the three local banks make up about 55% of the STI's weightage, the overall underperformance basically dragged the index down. If you're coming back to Keppel DC Reit, it closed up 2.66%, driven by its fantastic DPU growth. But if you zoom out and take a look at the stats, its current dividend yield of 4.16% actually trails the overall Singapore REIT sector and is even lower than the three local banks. So if you look at its current upside catalyst, I'm not sure whether it's going to be sustainable. It could be just a knee-jerk reaction.
I see. Well, Ben, across the region, let's talk about toys and anime. Because Sony bought this strategic 2.5% stake in Japanese game franchise giant Bandai Namco, which owns Gundam and arcade classic Pac-Man, and that is with a view to grow its anime business. Now, the transaction is valued at 68 billion yen or 588.7 million Sing dollars. Any quick thoughts on the move given the booming appetite for anime?
Well, very smart move by Sony from a business model perspective. It's always, much more risky and challenging to start a brand new franchise and make it successful. So the much easier way is to simply buy an existing intellectual property that already has its own market. So Gundam is, it's not just a household Japanese name, right? It's like Godzilla, right? So in the US, in the West, they also know about Gundam and Godzilla. And if you look at what has been happening on, let's say, streaming TV on Netflix, there's actually a English language Gundam CGI anime series that came out, I think, this year or late last year. It was pretty good, actually. And if you look at Pac-Man is a appeals a lot to the nostalgia of people like me, the Gen X people, right? And Pac-Man itself has made cameo appearances in U.S. movies and TV series. Again, just to show my Netflix street creds, there is a movie starring Adam Sandler called Pixels with Pac-Man inside. And of course, anything with Adam Sandler is always a hoot, right? There is some risk. Because Sony is known for its engineering chops, right? So it's solid when it comes to engineering, but not really well known for its creativity. So gone are the days where Sony launched the era-defining Walkman and the PlayStation 1. Those were decades ago. So Sony itself right now is like, okay, good stuff, but not going to move the needle, not going to be market moving, not going to move humanity to the next stage of its evolution. But there is an opportunity here because, instead of working on the IP itself, Sony can actually let its subsidiaries do the work. And there is a very good precedent for this. Solo Leveling, again, another anime in streaming on Netflix, is based on the hit manga series. It's actually made by A1 Pictures. A1 Pictures is a Sony subsidiary. Is really, really good. And again, based on what I'm saying, you probably get a sense that I binge Netflix a lot. That's quite true as well.
All right. And, Ben, we are slightly running short of time, so I only have about 1.5 minutes to go. But I do want to take a very quick look at Mac 7 earnings out thus far. Good report out of Alphabet, not so good news for Tesla. What is your assessment? What's next?
Well, the bottom line is that Tesla has got very specific risks, which is the U.S. government is basically rolling back its EV subsidiaries. For the rest of the companies you mentioned, they are still on the AI mania train, so they're still going on strong. So this is basically a tale of two cities. We can't lump them together. So I would expect results from the rest of the Mac 7 as well as TSMC to be really, really good. There is an upside surprise potential for NVIDIA simply because the U.S. has lifted its ban on AI products to China.
I see. Lots to watch indeed, and thanks so much for the insights. We are really looking forward to what's next when it comes down to results out of Microsoft and Apple as well. Thanks, Ben. That was Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.